Hey, what's up, guys? So, a bit of a crazy story here that we got today. Now, in a bit of a shocking move here this year, Saudi Arabia sold, get this, close to half of all of their US stocks and completely exited some giant positions in some of the most popular stocks in the market. Now, there is some nuance here that needs to be explained, which I will. But overall, we're talking about some huge selling here from one of the biggest, most important institutional investors in the world, because of course of how rich Saudi Arabia is from all of that oil money that they then use to invest very heavily into the stock market through the PIF, what they call their public investment fund. In fact, back in 2022, the PIF held over $50 billion worth of US listed stocks. So clearly they hold a ton of influence over the market. And if you're selling a huge amount of that, well, it's going to lead to some questions, right? I mean, you're going to ask things like, are you predicting a crash is coming soon? Is that why you're selling out? And are other institutional investors selling out too? Are they following your lead? What exactly does all of this mean? Well, I'm going to do my best to answer these questions in today's video for you. I'll break down the numbers. I'll show you exactly what's going on here and even what stocks they sold out of. And I'll let you know what I think all of this means for the future of, the economy, the stock market, and all of it. I'll give you my opinion on all of this. So I hope you enjoyed the video. Hit that like button. But let's just go ahead and dive straight into this. Now, this was originally reported here by Bloomberg. It says Saudi wealth fund slashes reported holdings of U.S. equities. They fall by 17 billion, and it replaces some tech stocks with call options. So digging into the report here, it says that the fund cut their U.S. holdings by roughly half, bringing the market value, their market value, down from $35 billion at the end of 2023 to now less than $18 billion this year in the most recently reported quarter to the SEC. And by the way, that right there translates to about a 49% decrease in their holdings. So just, quarter to quarter, from in one quarter, they decreased their holdings, their stocks, by about 50%. I mean, that's a gigantic amount of selling there. Now, it also says that they completely sold out of numerous high-profile tech stocks, including Amazon, Microsoft, and Salesforce. However, it did also replace some of these direct holdings with call options of a smaller amount of shares. And I'll explain what that means here in just a second. But it says that they do that in order to reduce their exposure to these companies and lower their capital at risk. And then it finishes up by saying that they also completely sold out of several financial and travel-related companies, including huge positions that were in BlackRock, Carnival, and Booking Holdings. Okay, so that right there is a little scary, right? I mean, they sold out of some of the biggest, most popular stocks like Microsoft, Amazon. They also sold out of some big financial companies, BlackRock, and they sold out of even some travel companies, big ones, Carnival, Booking Holdings. So what would that tell you right there? I mean, to me, it kind of signals that they are expecting the macroeconomy to get worse, because you're talking about some of the biggest companies that represent the market. You're also talking about financial and travel companies that typically get destroyed during a recession because, of course, people can't afford to pay back their loans or invest in, assets or growth opportunities, and they certainly can't be taking expensive vacations. That's usually the first thing that you cut out of your budget when the economy tanks. So yeah, that does kind of signal that they might be expecting things to get worse moving forward. Now, the article mentioned here also adding some call options instead to lower their exposure and risk. And yeah, that is something that some investors do at times. It basically lowers your risk because it requires a smaller amount of initial investment. Options can get a little tricky. I don't have enough time to explain, how all options work in this video, but basically you would just have to pay for the premium of the call option, which is generally a lot smaller than the stock price. And then that option still allows you to buy back the stock later at a certain price if it reaches the strike price within a certain time limit. So for example, say you have like one share of Google, say it costs $100, but a call option only costs $5. Well, then you could sell the stock and buy the option instead for that smaller amount. And thus you're lowering your downside risk to only $5 instead of $100. And of course, that option could still become worthless if Google never reaches the strike price by the expiration date. That's a whole different topic about the unique risks of options trading. But in this particular case, the PIF is essentially using them to just kind of really, the main thing you should take away is that they're using them to lower the amount that they have invested in stocks without being completely left out of them. If they happen to rise later on, they'll be able to buy back in using these call options. But with that in mind, how much did they actually sell out of these stocks and how much did they buy with call options? Well, even with the options, well, it was still a giant amount of selling and still pretty close to half of their entire portfolio. In fact, according to their filing, the total stock portfolio, the value of it fell from over $35 billion down to around $20 billion. So that's about a 42% decline, even including the new options that they added on. And when looking at those options, I mean, you can see how small they are by comparison. So for example, they sold over 1 million shares of Adobe, but only added back a few 100,000 in call options, which by the way, those aren't actually like real shares that they own. It's just the option to buy that many shares later on. And with AMD, they sold over 4 million while adding back 1 million in options. Amazon, they sold over 4 million and added back 1.5 million. CRM, they sold 2.6 million and added back half a million. Google, they sold over 4 million and added back less than 1 million. Meta sold over 2.5 million and added back only a couple 100,000. And Microsoft sold close to 2 million while adding back only a few 100,000 shares worth of call options. And then here's just a video recording that I made of everything sorted by the amount of shares that they sold. And you can see just like the massive amount of selling here. Most of these being complete exits of the positions, but you can see millions and really billions of dollars sold of popular stocks like Carnival, NextEra Energy, Starbucks, PayPal, AMD, Zoom, Google, Amazon, JP Morgan Chase, Meta, American Tower, Microsoft, Home Depot, Adobe, BlackRock, Walmart, and many more. It's pretty crazy just the sheer amount of how much they sold here. But so what does all of this mean? Are they predicting a market crash? Are other giant investors following suit with them? Well, here's my overall opinion on all of this. Personally, number one, I think it is absolutely possible here that Saudi Arabia is trying to at least time the market a little bit. You're not going to be cutting half of your portfolio if you think everything in the macro economy is perfect and you think stocks are just going to keep soaring. And the fact is that right now, things really aren't looking too great. The stock market in general is near all-time highs, despite all the inflation and rising interest rates that have been weighing on the economy, which continues to raise the risk of a recession. However, that doesn't necessarily mean that all of their selling is due to that, because if you look at their previous history, even with all the selling they just did, they still have way more money invested today in stocks than they did just a few years ago. In fact, here's a chart showing their portfolio since 2018 and 2019, which you can see during that time, they held less than half of what they hold today. But during the pandemic, they went very heavily into a lot of tech stocks in particular that proceeded to skyrocket, and that ballooned their holdings up to over $50 billion. Now, since then, many stocks have come down, while others have actually risen by even more. But overall, you can see that they've been lowering their portfolio over time. And to me, that signals more like they're just kind of trying to cash in all of those insane profits that they made during these recent years, during the pandemic especially. I mean, you go from like less than 5 billion to over 50 billion in a couple years. Yeah, you're going to want to lock in some of those profits. And to still have over 20 billion invested today in stocks, I mean, that's still like 4 times larger than what they had before the pandemic. So I don't necessarily see that as this like hugely bearish signal that they think the market is about to crash to absolute zero. I see it as more like, okay, they're still super heavily invested in the market, like, you know, really most of us can't even imagine having $20 billion worth of stocks. So they're still super invested in there. But they've also made gigantic gains on that money. The macro economy is trash. The stock market is up at record highs. Why not lock in some of those profits just in case? I don't necessarily agree with them. I'm still buying stocks myself, but I can also understand their position. And even the biggest stocks that they sold out of, I mean, they still bought some call options too, just in case those happen to rise and they don't want to be completely left out. So it kind of just is what it is. I mean, it's their choice to do what they will with this money. Now, if all big institutional investors are also doing this, if all the hedge funds and all the investors are selling out and cutting their portfolios by like half, then yeah, that would be a much bigger concern to me. But I don't really think that that's what's happening either. I mean, the S&P 500, for example, it's up double digits this year, with most of those gains occurring in the first quarter when the PIF was selling out. So that tells me that most other big investors were actually buying pretty heavily. And the same is true for most giant investment management companies like Vanguard, for example, who saw their total stock market index fund rise by a double-digit percentage in the first quarter as well. And that just kind of suggests to me that most investors have actually been pretty bullish on stocks this year. So no, I don't really think that the rich elites maybe as a whole are kind of signaling a giant crash here, at least not quite yet. But rather, I think it could be a little bit more of an isolated event to Saudi Arabia specifically, who saw their portfolio rise by a giant amount and they decided to lock in a lot of profits just in case because of all the uncertainty out there. And you have to admit that there is a lot of uncertainty there. As long-term minded investors, we try to look past that a little bit, but in the short to medium term, you have to admit there is a lot of question marks out there. So, I think Saudi Arabia is probably trying to do a little bit of some timing the market here, but it's also them locking in some profits, which as a long-term minded investor, even myself, I also like to lock in profits at times too, and especially during times of like huge uncertainty. But I also like to be a buyer of times of uncertainty because sometimes there can be great values. Right now, the market is up a lot, but there are still, I would say, several attractive stocks out there too at these prices. So it's a bit of a mixed bag, guys. It's hard for me to give too strong of an opinion on this. I feel like it's just Saudi Arabia doing what they're doing. It is what it is. I'm not going to necessarily sell out of all of my stocks just because Saudi Arabia is locking in profits. So that's more of my take. I'm still investing in stocks, but I think it is important to be strategic and be cautious and pick the right stocks at the right moments and just kind of move strategically, even if we are long-term minded investors. Anyway, I hope that you enjoyed this video. Maybe you got something out of it. Maybe it was some interesting information for you. If that's the case, please consider hitting that like button and subscribing. It would mean a lot to me, helps me out a lot. And I appreciate you guys so much. Thank you for all your support. I'll catch you in the next video, my friends. All right, take care, everybody. Bye-bye.